After dwelling on the twin issues of harmonization and simplification of taxes for the last 2 days, debate was today focusing on the best tax practices that can be adopted by African countries. Key on the agenda is the need for governments and stakeholders to fully understand and integrate tax regimes for the region in order to take advantage of the increasing interest in Africa as a new frontier in global economic growth.
There's a lot still to be done in terms of capacity within revenue authorities, within the profession, within corporates themselves. So capacity is a big issue on the continent, logistics sometimes, infrastructure, etc. So yes, there's still a lot to be done.
Kenya, which is rated one of the best case studies in automation of tax systems, also shared on best practices in the country and the challenges emanating from the integration of the East African community. Taking center stage was a controversial value-added tax, popularly referred to as VAT.
Most of the countries are trying to bring their rates closer. So we expected that sooner or later the rates should be more or less the same, especially in the East African region.
Overall, delegates are agreed on the need to enhance capacity, professionalism, and increased accountability among taxpayers to improve tax collection. The world is now focusing on Africa as rising economic opportunities spark off the second scramble for a continent often described as the dark continent. The success of this scramble will, however, depend on how investors deal with the risk posed by widespread tax disparities within the region. Reporting for Citizen Business from Mpumalanga, South Africa, I am Timase.